What up, what up, what up, everybody? Hope you guys are having a wonderful day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Everybody is having an amazing day as we are about to do what we do each and every day, identifying from an educational perspective both breakout and reversal trades as we are on our last Tuesday of 2020. We are, the end of the tunnel is there. And all we got to hope is that 2021 doesn't just say, hold my beer, right, to 2020. So we're just about there, for all of the ups and downs, and certainly there's been a tremendous amount of ups and downs this year, when it comes to everything happening between globally and politically and the pandemic. And, we focus here primarily on the market, and the market is giving us what it always does. It gives us opportunity. And so, the thing to remember is that no matter what your year looked like, this is the opportunity to kind of finish it out, wrap it up. I know this is kind of the end of the season where we don't have as many people that are in the world of trading. And yesterday we kind of talked about that. It wasn't as many opportunities, although we did find some good reversals yesterday and a couple of decent breakouts and a couple of small stop outs. So we'll go through those today. But just kind of keep that in mind, is that the market's only there to give us opportunity. It's not there to be good. It's not there to be bad. It's to give us opportunity. And the more that we know and the more that we're able to take advantage of that, the better that we'll do. So I'm going to go ahead and shrink my head, and we're going to get started on today's session. All right. I'm going to remember to shrink my head today because that's an important aspect. So let's go ahead and move over to the S&P. So starting first with the ES. So yesterday we talked about this breakout area right in here. And this breakout area that we talked about yesterday was turned out to be a pretty good little runner off of this level as we hit it once, before the market had given us any sort of an indication for a breakout. Gave us a bit of basing, and then we popped above there. And I said, listen, if you took the trade, you're still okay. Your stop just had to be down below this pivot, and we never came back below that pivot. Matter of fact, 1, 2, 3, 4, 5, 6 candles later, we were then off to the races. So hopefully you were able to grab that, get a couple of points, follow through. Remember, this is an all-time high, and what do we say about all-time highs? Would I rather buy an all-time high, or would I rather short an all-time high? See, think about that. Would I rather buy an all-time high, or would I rather short an all-time high? I'd rather buy the all-time high, because if I get quality basing before a level, that's going to give me an opportunity for a breakout. And we've rallied over 23 points off of that breakout area, about a 20-point rally off of that breakout area. So that's not a bad little move out of that zone. So now I need to remove that line. Obviously, this would be our new all-time high. And basically, our rules stay the same. Anytime you have an all-time high, is if you get basing in front of it, you can take a reversal trade. In the overnight, we didn't get anything of phenomenal setup in our overnight trading. Nothing really struck me as an outstanding trade setup. I'm looking to kind of this area here as the best structural setup, but from a time of the day setup, it's frankly pretty weak. But I'm still going to wrap my lines around it because structurally it's pretty sound and pretty strong, and I like that area that is available. So kind of keep that in line. That's right, Superman. We don't tug on his cape, John. All right. So let me close this up. So I think that would be the only area really kind of worth looking at from a reversal standpoint. Now, yesterday in the NASDAQ, we did come back. We had the basing that we had talked about, and we said last night that, or yesterday in the session, that if you took the NASDAQ breakout, then you were probably already 6 candles into it when we were doing the session, because the session was right here, 7 a.m., right? So that was 1, 2, 3, 4, 5, 6. We said, move your stop to break even. But there's a reversal trade down here that's pretty clean. And price did come down and give us a very quick touch and go off of that level. I mean, it was a very, very hard touch and go off that level. Batman cannot tug on Superman's cape. He tries. It just doesn't work. So off that level, we got a nice little touch and go. So what I'm going to do now is remove that line. This was my eventual target, this 12,964. I thought we would make it there by the end of the year. Let's see if we do. I mean, mostly it's just for shits and giggles, or I mean for giggles. It's sorry, it's mostly it's just for fun, because that was our Fibonacci extension from this move, from this move. I think it was this move back in here, where we had taken a Fibonacci extension and said that this was our eventual target. So let's see if we end there, or above there towards the end of the year. That'll be kind of fun to take a look at. But as far as overnight goes, and some overnight trading in here, similar to what we talked about yesterday, or in the S&P, with this area right here being an okay zone. Glad you didn't, Dennis. I know you have sensitive ears, and I don't want to damage them. So this would be probably the area. It corresponds with that level in the S&P. And so I don't think I would take both, frankly, because both, with both of them being set at not a great time of day, I don't know that I would take both. But I think that could be a decent little reversal point, 12,850 by 12,843. From a structural standpoint, it's very clean. The problem is just the time of day that it was created. Next, the Russell. Now, the Russell, I like the way Dennis said. Mr. Russell didn't want to play ball yesterday, and he did not. The Russell market did not play ball. Actually, the Russell, if you look at this on an hourly chart, put in a bit of a head and shoulders top, right? Shoulder, head, shoulder. It's not a clean head and shoulders because it's not technically slanted up. But I would say that if you're looking for a retracement day, this would be the market that would be the most likely to give you that retracement, and a move down would be below this 1992. Now, by the way, 1992, you don't have a lot of profit margin down here because you do have some decent demand down below there at 1979. But can you make some money in the Russell from 1992 down to 1979? Sure, you can make some money in there depending on the size of the position that you take and all that stuff. So if you want to try a short, if you're, just destined to short today, this would be the one that I would look at. So just keep that one in mind for today. And then the Dow, obviously, same breakout trade that we talked about with the other markets. I will say that this one, we would look for this area here. Yeah, that right shoulder is pretty weak. It's definitely not as high up as the left shoulder. And so, definitely giving you that indication that you'd be better off to see price drop from there. I would be a little conscious of that area of demand. I mean, that area of demand still technically in an uptrend, but, you can clearly see the weakness here. So it definitely, weakens that case for that zone of demand. So let me shrink this up. Zoom in on this one. All right, and share this grid. All right, next, our energies and metals. So looking at our energies and metals markets. Crude oil. So by the way, our for those of you that had looked at our CL iron condor, we're down to 16 days left in that crude oil iron condor that we had talked about a couple of weeks ago, that was paying a really nice credit. It's now down to paying 32 cents worth of credit, where it was paying significantly higher than that when we looked at it a couple of days ago. So I'm not sure how many of you got into that or considered that, but we're still inside of our iron condor range, right? Our iron condor range was this gray box right here when we first looked at that and kind of established that as an area. So with that level still being prevalent and valid, I'm not going to really add anything much to my trade setup, because my trade setups that I've got here, nothing is ideal from a reversal standpoint. We talked about this one down here yesterday, this 46.49 by 46.36, and we haven't added anything to there. So I'm not going to add anything to it today. I think it's a better idea just to sit back and wait and see kind of. Oh, come on! I will say the Thinkorswim zooming in function when you drag and click once you've switched to auto is really obnoxiously annoying. I don't see this area here, I guess, is okay. Off of this strong move away from yesterday morning, but it didn't give us a new low. So by not giving us a new low, that weakens that area of supply. So I think you'd probably look under here as probably a potential for a breakdown. But then if you get a breakdown here, you've got some demand to contend with below you. So I just don't think there's a lot there. I'm not sure, Dennis. I thought the vote was going to be yesterday for the $2,000. I thought that was going to be the vote. Oh, no, it was the House yesterday that voted. Today's the Senate. So I don't know. I heard that one's got a very low chance of passing. So, but, all right. Next, gold. So looking here at gold. We had a supply level yesterday on a 15-minute chart that I thought was worthwhile. Was this little wick over wick area here below a pivot high. I thought it was worthwhile. The market thought I was an idiot. And so it just rocketed right through that zone. And you know what? I'll take it. Because how wide was that level, right? It was like a 1-point level. Stop above here. You're looking at a 2-point level. You got to be willing to break a few of those. All right? I'm okay with those levels that those levels broke. And so what would be my next area of interest? Well, looking at the 4-hour chart, my 4-hour chart tells me that I shouldn't have many areas of interest. Matter of fact, I should probably just hold off a little bit because there's just not a lot of great trade opportunities in this market environment where we're chopping sideways between major areas of supply and demand. There could be some iron condor possibilities in here, and we will look at that today. We'll look at that today in our live trade room. I'm actually doing today's live trade room. I'm doing today's live trade room for Corey because Corey normally does our options longer term session live trade room, but it's Corey's birthday today. So I told him to take the day off and that I would handle his live trade room today. So everybody do me a favor, send him a message. I'm going to put his email address in the chat, corey.lane@tradersarmy.com. Send him a happy birthday message. He'll appreciate it. It's Corey's birthday, and even though he's older than me, he still looks younger than me. The jerk, but that's all right. So anyway, I'm doing the live trade room today. This may be one that we look at for a swing trade or a position trade on here. And I know we normally do longer term sessions in the live trade room for today. So we'll see what that looks like in today's session. Now, interestingly, looking at the nat gas trade from yesterday. So yesterday's nat gas position, we had talked about the fact that there was a potential for a gap and go. Well, we did get below the first candle's low. 1, 2, 3, 4, 5, 6 candles later, we were still within the range of that first candle's gap and go, right? So here would be our first candle, right? Red candles 1, 2, 3, 4, 5, 6 candles later, we're kind of in the middle. So basically telling you, hey, look, this isn't going to work. You should probably get out. We have now come back up to our line of resistance. Now, why did we choose this line as resistance? Well, old support oftentimes becomes new resistance. And so I'll that's a good idea, Dennis. I'll say that this level here, this 22389 area would be an area for price to potentially reverse. Does it mean that I'm short right now? Not necessarily. I still like to see a reversal candlestick pattern. And I like to go on a candle-to-candle short when I'm in this kind of a scenario. And so I've not gotten that scenario yet for it to really make any sense. So I will tell you, I'm kind of hoping that this candle sits here for a little bit and turns into a bit of a doji or something along those lines. So then I got a reason to get short coming out of here. But as of now, I don't have it. And then copper, same thing yesterday that we have today. Nothing. All right. So really, this whole page is just a whole page full of nothing. I'm sharing the grid, but I'm basically sharing nothing because there's nothing on here. All right, agricultural futures. So looking at the ags. So interestingly, looking at the ags yesterday, we did get a breakdown in soy and we got a reversal in corn. So soy gave us a bit of a breakdown as we broke below this 1260 area, and it's continued to move down there a little bit from that area. So if you took that one, you 6 candles later, you told you to move your stop to break even. 1, 2, 3, 4, 5, 6 candles later, we were sitting here. Price had basically gone nowhere, telling you, okay, take your stop, move it to break even. So that's kind of where your stop should still be. If you want to still get in this thing and you think that it still has legs to move down, you actually have another breakout trade down here below 1245 as a potential. But at the very least, I would say take your stop and move it to break even. Corn did just the opposite. It actually came down and retested our zone of demand, and we got a nice little rally away. So we got a nice little move away in corn. And yesterday, in our trade update, we talked about moving your corn to stop to 453 to lock in profits. So if you move that corn stop to 453 to lock in some profits, then you're still in the trade, as it has not come down yet to stop you out. And so that would be the thing to look for is, okay, my stop is still at 453. I think 453 is still a good place for that stop, and I don't think that I would move it off of that area. So leave it at 453. If you want to add to the position, because I know a lot of people are going to talk about how do I add to the position. If we start basing there below that 457.5, and you want to add to the position, then I think that could be a place where it might make sense to add to the trade. Okay. Now, as far as a new trade, I've got to remove that level. I don't necessarily have a new trade or a new level to go off of. Now, real quick, I want to show you guys when you go to the website. If you just go to the site and you go to, I know a couple of you are fairly new, so if you go to the site and you go to the trade worksheet and update. So it's under Pro Member Community. Once you're logged in as a Pro Member, trade worksheet and updates. This is where we update all of our trades throughout the day. So if I go to our trade updates and I take a look at it, here was yesterday's trade updates, and that's where we talked about, the ZC worked like a charm from last night's level. At this point, it makes sense to move the stop and lock in some profits. Right. This is also where we post. A couple of you have asked, where do we post our grids each day? This is where we post the grids each day as we do the DMC. So just make sure you guys are aware of that and you kind of know where that is and where to look for those. All right. Next, wheat. And the reason I show that is because in wheat, we talked about the fact yesterday in our update that we got stopped out, right? So whereas corn worked out pretty well yesterday, we talked about the 60-minute demand level, 60 was blown right through. And that wheat level basically told us, listen, this trade's just not going to work. And it did it quickly, didn't it? Right? Now, we blew right through the stop loss, and now it's kind of meandering its way back up. But the origin of the move that caused us to create a new low and break through an area of demand is going to be this wick over wick area up here. So I'm gonna use that wick over wick as my next area of supply that's worth taking a short. I don't know if we'll make it up to there. This is actually a pretty nice, drop and then a rally, and then the next move is usually priced to come back down. That's a bear rally short setup, and frankly one of my favorite setups. So let's see. Price actually just may roll over from here, and that would be where you'd look at like a 4-hour candle to candle short opportunity, because this is a good reversal candlestick. Bean oil is just telling me that it's crapping out up here at the top, and it's just losing a lot of its steam and a lot of its momentum. So with that is a key to look at. All right. So those are all of our ags. Let's see. Can you look at the Mexican peso? Absolutely, Jersey Trader. Good to see you in here this morning, brother. How's the baby coming along? When's did the baby we're ready to roll, baby watch? All right. All right, next. Whoops, wrong chart. Sorry, I'm jumping around with too many charts open. All right. Next, let's go to bonds and currencies. So, due dates today. Okay, well, good luck, man. We're praying for you. I didn't want you to think we forgot about you because we certainly didn't. So we're praying for you, man. Make sure you let us know. On the bonds, we are just very sideways in our bond market. Nothing to add on our bond trades. I mean, absolutely nothing to add. The 10-year note and the 30-year note both chopping along sideways. Nothing good to go here, and so I'm just going to let that thing be. I'm not going to add anything to it. Next is the euro. So looking here at the euro, we have demand and supply. We're still in between the areas, and I think that not trading was the right thing to do yesterday in the euro. We decided that there was no good setups, and so we didn't want to take it. And I will say that we did create this area down here last night at around the same time that the S&P and the NASDAQ made their levels. So there is a little area there for a potential reversal, but we're also coming up to our area of supply or resistance. So, but I'm just not going to add anything to it. Canadian dollar. So the Canadian dollar did give us a little bit of a potential on the breakdown, but did we get the prerequisite basing necessary to take the short? Right? When we look at this, and I ask myself, well, I know what my rules are for a breakout trade. I need 3 touches. Well, we have 1, 2, and then my third touch would have been the basing before the level. So I had the basing. Did I have the room to roam? Well, as far as room to roam, what was my next clean level of demand? Well, I had this area of demand right here, but that's not a super clean level. Yeah, I had no clean areas of demand. But then we talk about, did I get the prerequisite basing necessary before the breakout? And the answer to that is absolutely not, right? Absolutely not. And that's where we see price broke down and then boom, popped up through there. Now, you're going to have traders who say this is why breakouts don't work. That was a false breakout. Look, a lot of novices are going to take the breakout on that old area of support, and they're going to be wrong. And I'm going to tell you that's because that's not a breakout, right? There will be traders that take the breakout here incorrectly. Now, it did come into an area that hindsight being 2020 was a good area of demand. Hindsight is always 2020 in those kind of situations because you can say, oh, look at how well that demand area performed, and we got a strong move away. I didn't think it was that strong of a demand area yesterday because we're basing in front of the level, okay? So when I look at it, I want to be very conscious of the fact that it didn't follow the breakout rules. And so just because that it violated and popped back up doesn't mean that I'm anti-breakout, right? Now, I will say that we've come close to our area of supply that's fairly clean here. And that area of supply is a fairly clean supply. But what are we doing here close to the zone? We're basing in front of the level. Now, if we think about this area of supply, my stop has to go up here, right? Somewhere above the pivot. So that's my risk. I'm basing basically at a one-to-one reward to risk away from the position. Now, is a one-to-one reward to risk enough for me to justify taking the trade in the context of a slightly upward trend? The answer to that for me is no, it's not. And so I'm going to remove this level completely. While it was a pretty good level, the basing in front of that zone just totally nullifies that trade for me. Okay? All right. Let me share this one out. Okay. Next, let's go to bonds and currencies. Numero dos. New Zealand dollar. So the New Zealand dollar yesterday, looking at this level, we came super close to the area. We didn't get filled in the overnight. So then we came back up to it and we based sideways. So if you took the short, first of all, you probably shouldn't have because of the how we came close to it and then we popped through it before giving us a confirmation entry. And if you did take it 6 candles later, 1, 2, 3, 4, 5, 6, you're still at your break-even point, right? This is how we manage these trades. Now, that's a good thing, and that's a good thing because it allows us to reestablish an upward trend. Because it would have been a tough trade to really enter on a strong position anyway. And when I look now ahead at my levels of supply, I don't really have any super clean areas of supply for me to lean on for a reversal. We've got the high obviously way up here, which we're closing in on. But I'm just going to put that as a potential breakout high above here. And then as far as demand goes, these are awful wicky down here. And when I look at things down there that are that wicky, they scare me away. I do like this wick over wick area back here. That's just kind of far away from us and where we would get in and want to get filled. On a 15-minute time period, you go a bit smaller, and there's really not a whole lot in there that's super clean either. I mean, this one right here is not bad, but that's about all we have. Inside the Great British Pound. So in our Great British Pound level yesterday, we had come into the level, and then we based in front of it. Now, I will say this about yesterday's update. One letter is important. One letter is important. And I noticed that this morning. By the way, I am not a professional copywriter. So yesterday's update said 6B demand level is basing in front of the level and is not invalid. That should have said is now invalid. I realized this morning that I had typed the wrong word. That should say now invalid. Either way, you didn't get filled on the trade. But to me, this level, because of the basing that happened immediately before the level, was invalid at that time. Well, it is still valid. Yeah, it's still not a valid level for a limit entry. It's that, so I would now take it to a confirmation entry only because we came close to it and didn't get filled, and which kind of stinks because that was a decent little setup. But we drew the level, frankly, right where it should have been, and it just didn't get filled. So now they're both confirmation levels around current price. I think overall, I think both of those are still fairly clean areas and fairly clean levels. Joanne Farley School of Typing. I make so many bad typing errors, Dennis, and it's usually Liz who has to correct me. That's one of the many things I love about Liz. I don't know if she's in yet. I haven't seen her talk to me yet this morning, so I don't know if Liz is in here this morning. But Liz is my favorite. She corrects me on those when I make mistakes. And by the way, I appreciate it because I need it because I make so many mistakes. It's ridiculous. Japanese yen. So we had this area here as a confirmation entry. You may or may not have gotten filled on your confirmation entry, depend on where your activation rule is. So our activation rule on these is 50% of the way into the zone. In my mind, I did not get filled because I was one tick away from my activation rule getting filled. And so since we came close and didn't get in, price moved away. Now I'm just going to remove that level altogether. That level, in my mind, needs to go away. However, it's not dead. What it now becomes is a potential area for a breakdown, right? That now becomes a potential breakdown area since we hit it once, twice, 3 times a lady. If we get basing in front of it, now it's a much cleaner breakdown area. Ingrid, I took a breakout long and then overnight on the BP. Off this level right here, Ingrid? That's a good setup. Absolutely good setup. So nice job on that. Glad you're able to take a little bit of that. So that is awesome. All right. Yeah, Joanne, I did love Joanne. I worked with Joanne very closely back in the days of our old life. I don't know I don't even know what she's up to nowadays. I probably haven't spoken to I haven't spoken to Joanne since I left the academy. When did I leave now? 3.5 years ago? It's been a long time. I mean, I've not been there a while. So, but she definitely went above and beyond and did a tremendous amount. She won an award called the Above and Beyond Award. So, I should probably catch up with her. I don't know what she's doing. All right, so this area of supply, we hit it and have moved away. That was we didn't have that level kind of marked, by the way. I'm just showing it as of now because I hadn't been trading really gap fill levels. I hadn't found gap fill levels really being as effective in the futures markets. And so the Australian dollar still kind of in between. I didn't know that she was with Sam and Jasmine. All right. So looking at this on a 15-minute chart, I mean, this area down here is pretty clean, but once again, it's that same time of day that we found the S&P level as well as the NASDAQ level as well as the Euro level. So it's clean. It's just not great time of the day. Well, Dennis, I hate to say it, but I kind of think I was the first Exodus. At least if I consider myself one of the good ones. So I was the first one out. All right. Now, let me look at the Mexican peso real quick. So my Mexican peso. So what were you looking for there in the Mexican peso was 49.71 by 49.85. So 49.71 by 49.85. So you're looking at a short off of this level. So my problem with a short off of this level is that we had a rally up into it, and then what did we do just in front of the level? Right? We based right in front of that level, and then we came into the zone, thus making the level completely, untradeable. And so that area is not going to be a tradable level for me because of the basing immediately before the level. Now, if you took the short and you're waiting on it, right? Maybe you took the short anyway. Well, now 1, 2, 3, 4, 5, 6 candles later, it's telling you, hey, this is not going to work. Now, this was an example of the basing before the level being the kiss of death, and that's exactly, the way we look at it. Might it still roll over and come down from here? You bet your assets it might, but it's not following our rules, and so I don't want to play with it. It's kind of one of those things where it's got to follow my rules or I don't play. Now, when I look at this on a 4-hour time period, overall, I see that probably the best level is this one up here, right? That, to me, is the best one, the one that makes the most sense. On a 1-hour chart, that area is not quite as clean, though, because of these wicks here right around it. So I will say that I don't really have anything in the Mexican peso that I want to trade at the moment. The best thing being this area way down here on a retest. So that would be the level. Yeah, Dennis, Thrive was kind of my swan song. I literally taught one more 3-day class after Thrive, and then I was gone after Hurricane Harvey. It was quite literally Hurricane Harvey that was the nail in the coffin that made me say I needed to come off the road. And if anybody lives in the Houston area or goes back and Googles Kingwood, Hurricane Harvey, you will understand why I decided to come off the road, because good Lordy, it was not pretty. Go Google some images of Kingwood, Hurricane Harvey, and most of what you see was within a mile of my house. And that's the main reason why I left, is just I got too many wonderful things to be home for, and that was what I did. So, all right, well, that's all I have for today, everybody. I hope you guys have a great day. I know it's kind of a smaller room today. Do me a favor, if you didn't already, go click the thumbs up icon. It means a lot. Lets the computers know that people are actually watching, paying attention, and then share this out with others. And I'd love to know, in the comment section below, those of you guys that watch this on the archive, what is your trading plan for 2021? Is anything going to change? Do you plan on doing something different? Do you plan on changing something that's going to be more, worse, better? So just let me know. I'd love to hear in the comment section down below. Yeah, Dennis, Houston does seem to get hit a lot. It's actually not Houston, it's Louisiana that gets hit a lot, man. It's right up there. I felt bad for you know, my sister-in-law lives in Baton Rouge, Louisiana. We live in Houston, and they just east of us, but west of them, got hit with 3 hurricanes this year. I mean, just right in a row. Lake Charles, Louisiana, just got absolutely crushed. Houston, we get one every now and again, but Harvey was a big one. And it was, I don't know if anybody realizes, it was the largest rain event in the history of the United States. So it was crazy. It was a big one. So, all right, everybody. Well, that's all I got for today. I'll be back tomorrow. We'll see you tomorrow on our hump day. For those of you that are Traders Army members, I'll see you today at 10 o'clock in our live trade room. Other than that, I'll talk to you soon. See ya.